Hello guys, welcome to my channel. In today's video, we're going to do a trading recap on the trades that I took in January 21st, and I will explain how I made $464 scalping Amazon options in 9 minutes. But before that, let's go over my watch list to see what I was watching on that day. Well, I was watching Apple, Amazon, Intel, Nvidia, Palantir and Tesla. Usually when a lot is going in the market, it's really hard to focus on all of the stocks. For me, it's really hard to focus on more than 4 or 5 stocks in a day. When I focus on more than 6 stocks, I usually miss all of the trades. I will get FOMO. I will trade emotionally because I feel like I'm missing a lot of moves in the market. So that's why I usually limit my watch list to 4 to 5 stocks. But well, in this day it was 6 because Intel had earning, and because of that earning, I was expecting some movement. Well, the movement happened, but I was not really watching the stock on that time because in January 21st, I ended my trading at 9:39. I was watching Apple because Apple was creating a huge triangle and it broke it in November, as you can see. And then we saw a great uptrend on Apple. But since January, we saw a consolidation and a triangle. And in January 20, it broke this triangle. Because of that, and the volume was also good, I was expecting Apple to continue, and we had a huge gap in the morning as well. So because of that, I was expecting Apple to move up. The next stock in my watch list was Amazon. Amazon had a huge run in January 20. I was expecting to continue because we had a gap up in the morning. I was expecting it to go retest this upper part of the triangle and come back or maybe break it. No one knows. The other stock was Intel. Intel had earning on January 21st. As you can see, it was earning here. But apparently the reports came early and Intel had a huge run. The next stock was Nvidia. I was watching Nvidia because Intel's result would have an effect on Nvidia. I want to check out Nvidia during the day to see if it can have a move or not. And it did because of the Intel. Palantir has been in a huge consolidation. It went down and then bounced up again. So I was expecting it to break this triangle, but it didn't happen January 21st. So the next stock was Tesla. Tesla has been in huge consolidation during the last few days. It ran till January 1st and then it was consolidating. I'm expecting it to break above 880. As I said, I only traded Amazon on January 21st, and this is Amazon's 1-hour chart. And as you can see, Amazon has been consolidating, I think, since September, and it is creating this triangle. It had a huge gap up in January 20th. In pre-market, it went from 31.45 to 3200. In January 21st, it again gapped up, so the higher and lower level in the pre-market was this level for me to get into the trade. After market opened, Amazon went up, hit the resistance again, and then pushed back. This is the 5-minute chart on Amazon. I only traded during these 2 candles basically, and I ended the day there. So let's go to Interactive Brokers to show you my entry and exits and my mindset behind getting into this trade. So first of all, pre-market high and pre-market low will be a level for me to watch. Well, pre-market high was 32.98, but 3300 is a very big mental level. So I will not watch 32.98. I prefer watching 3300, and any push above 3300 will be an entry point for me. Also, below 3280 would be an entry point for shorting or buying put. So what helped me to get into this trade, for those who might ask, is first of all pre-market high and time on sales on level 2. So I get in at 1181. I bought a contract. I paid $1,181, and after I got in, Amazon broke 3300, a huge level. A lot of buyers kicked in, and it went from 3300 to 33, almost 10. So it was a $10 move in like 20 seconds, I think. And after this move, I saw sellers at 33.10, and because around 33.10, 33.15, it was a big level. Amazon had a lot of hard time to get out of this area. By the way, after this trade recap, I will go over and compare the stock price movement and option price movement in order to show you how powerful options are. But for now, I'm telling you, I sold it early, and I will show you why I sold it early in the next few minutes. But I'm not sad about selling it early, because profit is profit, and no one knows when the price will dump. So what happened after this move? I was expecting some consolidation here, but it went up and broke 33.15. So after this, I had FOMO. This entry was all wrong. The price was overextended in 1 minute chart, and it needed to come back. So what I did is that I entered with 2 contracts here. After I entered, I saw sellers are kicking in and buyers pushed back. Bid went below 33.15, and I saw, okay, this is dumping, and I got out very fast on 17.51. I was in this trade for 7 seconds, only 7 seconds, and I lost $116 in this trade. After this, I saw the price pull back, but it hold 9 EMA here, and also hold VWAP as well. It went up. I didn't get into this trade because I was not confident getting in. I wanted to see at least 1 or 2 candles opening above this VWAP and above this red candle. So price went all the way up to 33.15 at 9:35 and went down. In the next candle, I wanted to see if it opens above this 9:35 candle or not. If it was going down, I will not touch it until it gets around 33.15, but it opened above it, and it opened above 9 EMA, and it pushed higher. So here it was a confirmation for me to get into the trade. I got 1 contract at 14.98, and after 51 seconds, I sold it at 17.09, and I made $207 in less than a minute. I didn't hold it because I was not sure if it will push above 33.15. Maybe it was immature, but I'm still learning. No one is perfect in the market. I'm not either. But again, I was happy with my profit, and I wanted to get out of the trade. So after I sold it, I saw the price push back a little, again met 9 EMA and pushed up higher. At this time, I saw, okay, it's pushing, and in 9:39, I saw bid is pushing higher. I saw a lot of 33.18 and above in time of sales, and I got in with 2 contracts, but I bought 3,400 call options here. Until now, I was trading 33.50. I bought 3,400 call options because they were cheaper. I knew in this day, I couldn't trade after 10 a.m. because I had other stuff to do. So I just didn't want to lose all my profit here and break even or even take a loss. So I chose further out of the money call options, and I bought 2 contracts at 8.21 and 8.31. And after 27 seconds, I sold these 2 for $118 profit. After this candle, the price dumped and it went higher at the end. But based on my strategy and my trading approach, I just want to get a quick move and be in the trade for less than a minute or maximum 3, 4, 5 minutes. So because of that, I prefer to get in and out very quick and make my money and get out of the trade. So as you can see, the whole time that my money was in the play was around 1 minute and 44 seconds. And the other 7-8 minutes, I was just watching and was trying to be patient and read the time and sales on level 2. So these were my trades on Amazon on January 21st that I totally made $464. But I want to explain more, and I want to show you how powerful options are. So let's go over option and stock price movement comparison. So here I want to explain how Amazon options move compared to Amazon's stock price. These are basically all my trades. On the left side, we have Amazon's stock. As I said, I traded 33.50 call options in my first 3 trades. And in my last trade, I chose 3,400 strike call option. On the right side, you can see Amazon's option chart, which is Amazon's 33.50 call option. This is the strike price. And the expiry is January 21st of 2021. Also, you can see my entry and exits in blue and red arrows. As you can see, I entered here in 9:31 candle, and the same time you can see 9:31 candle, and the price was around 11.81. And I exited after 19 seconds and my exit was around 14.37. Well, I entered here at 11.81 when the price was around 32.97, 32.98. When a stock break a critical level, option premiums will jack up. Here, the price went from 32.98 to around 33.10. It is like $12 move on Amazon. So here is the power of option. If you wanted to trade shares here, you could buy $32.98 share here. The price of the share here in Amazon was $32.98. So your initial investment would be $32.98 here. If you wanted to get out of the trade at the end of this candle, the candle closed at $33.10. With this move, you basically made $12 on $32.98 investment. So this means the return on investment here is 12 divided by 32.98. It's like 0.4% return on investment here. But what if you trade options? If you trade options and if you buy, let's say at $12, so if you want to buy 33.50 weekly call options on Amazon, you have to pay $12 in this moment for this contract. Call option is a contract that controls 100 shares and give you the right to buy the shares at the strike price. But well, we want to flip the premiums. So the thing is that we have to buy $12, which, as I said, it will control 100 shares. That means you have to pay $1,200 as an initial investment. If you hold the trade until the end of this candle, which is here, you will sell the contract at $60, which is basically $1,600. So you could make $400 on $1,200 investment. That is 33% return on investment, while here it was 0.4%. That is the power of options. So if you wanted to make like this $400, you had to buy like 40 shares of Amazon. And if you wanted to buy 40 shares of Amazon, you had to pay $130,000 to make $400 on this move. So that is what I wanted to explain. Well, again, I bought contracts here at top of this candle, and I saw buyers are not aggressive and they cannot push the price higher, and the price was kind of overextended in 1 minute chart. So I got out very fast. As you can see, I lost this area, and I lost $116 here. In the next move, as you can see, I bought it at $14.98 and I sold at $17, and I made $207 here. Well, if I were holding this trade, I could make $400-500 more here. Instead, I traded 3,400 calls. I was waiting for the price to get above this 33.80, and it went above 33.80, and I bought two contracts at 821 and 831, and I sold these two very early as well. I left $200 on the table. Price went up to 9.8, almost 10, but I sold them around 9. I mistakenly clicked twice and sold both my contracts here. I wanted to sell one of them and hold the other one for the next candle. After that, I saw the price pushed down, and you can see in 2 minutes contracts went from 10 to 6, around 625. That is like 40% drop in premiums in 2 minutes. That's the drawback of options basically. So you have to be very careful with trading options. If you cannot trade fast and you cannot read time and sales on level 2 fast, it's better to trade stocks or do not trade weekly options. Choose your expiry date in a month or two. If you choose monthly options, this pullback will not hurt your premium like this. So we can compare this with the next week's expiry, which will be January 29th. I will show you how this drop will affect January 29 options. So here is the January 29th 3,400 call options. So the strike price is the same. The only difference is the expiry date. The last one was January 22nd. This one is January 29th. So you can see at 9:41, the price was at 39. And at the end of the 9:42 a.m., the price went down to 32. Well, this is like 80% drop on your premium. While when you were trading weekly options, your drop in premium was like 40%. So if you even trade February or March options, these drawbacks will hurt you less. Your profit will be lower as well. So the lower the risk, the lower the profit will be. But when you are trading and you want to learn how to trade options, it's better to choose further out expiry dates in order to protect your capital. Well, that's it for today. Thank you for watching. Please subscribe if you haven't already. I'll talk about trading options and stocks. Please like if you enjoyed and comment if you have any other questions. I will explain and will answer your comments as soon as possible. And also please share it with your friends if you think it was interesting. Also please check out my Instagram sr.trades. You can find a lot of useful information there. Again, thank you for watching. Stay safe and we'll see you in the next video.